Hooty hoo, all my stock market gamblers. Welcome today. It's Monday. Stock market's back open. It's down a little bit today. Dow Jones Industrials are down a couple hundred points. It's early in the day. We'll see how this all plays out. Now, I do have a small short position on. Now, why do I have a short position on? Well, I think the rally is played out. I think we're rallied back up, and we're only down about 5 or 6% on the S&P from the all-time record highs. Do I think we're going to an all-time record high? Eventually, not now, not now. I think we're going to come back down and retest the recent lows. Why do I think that? Well, I look at the VIX. The VIX is kind of like, well, let's call it a crystal ball. Okay, if you look at the options on the VIX and you go out to like April 6th, let's say. All right, so you got the calls selling for twice as much, almost 3 times as much as the puts. Now, the VIX is a professional trader tool, and the professional traders usually get it right. The VIX usually gets it right. It's telling us that they are expecting the VIX to increase, meaning volatility in the stock market to go up. And I believe they are correct. And when that volatility goes up, the stock market comes down. I have a small position on going short on the SPY and the QQQs. I think we're going to retest the lows. That's just my opinion. You may have a different opinion, and you're completely entitled to that. So I have my small short position on there. What I want to move into, though, is where the excitement is. I want to talk about the real estate market again. Real estate market is wild these days. I mean, the mortgage market is just getting devastated. It really is. I mean, rates last week alone, they spiked up almost 0.5%. We're at about 4.7% for the 30-year fix. Now, historically, that number is low. That number is very low. I mean, anything under 6% historically is a great time. It's a great time to buy. I'm a realtor. I'm a real estate broker. Always a great time to buy. Not so fast. Not so fast. Look at the Fed. They want to raise interest rates 0.5 point next month and 0.5 point the month after that. What that's going to do is it's going to push mortgages up to 6%. Now, last week, the mortgage industry had their worst week of the decade. They haven't had a week like that since back in 2013. It's terrible when the mortgages jump like that. Look at a lot of people got hurt. A lot of people. I have a couple people looking to buy a home right now, and they just got priced out of the market with this jump in rates. They got to wait for home prices to come down. Now, I think home prices are going to come down. As a matter of fact, I think they're going to come down by almost 50%. Now, I know there's a lot of people that think they're going to go up from here, and that's okay. Everybody's entitled to their opinion. Listen to everybody's opinion and, come up, make your own opinion. You're entitled to an opinion. My opinion is that they're going to be about half off. Now, people tell me, well, Mike, that can't happen. Inventory is incredibly low right now. It's about 1/3 of normal, and that's true. Inventory is low. But here's the thing. You can have a collapse when inventory is low. Let's say you have a street, right? Okay, on a particular street, and let's say average house is $1 million. Well, let's say you got 3 houses that are for sale on that street. Okay, well, all of a sudden the buyers have gone away because they're priced out of the market right now. They just got hit with a big jump in mortgage rates. So they're holding off. They're going, well, I can't buy. Well, one of those 3 people is going to have to sell. They're going to be forced to take a lower price. And maybe that lower price is down 10%, maybe down even 20%. They might have to sell it for $900,000 or $800,000. Well, that price becomes the recent comp. The recent comp is the ones that the appraisals look at. The appraisers go out there and go, well, wait a minute. The last house sold for $800,000. Yeah, but they had to sell. Yeah, but we can't appraise yours higher because that is the most recent comp. So your appraisal's not going to come in. Now, look, if someone's buying all cash, they can come and buy your house for the $1 million. But if they need to get a loan, the appraiser's going to say, not so fast. We can't appraise this at $1 million. The last one just sold for $800,000. The recent comp will bring it down, and the appraisals will come in low. Maybe they can boost it up to $850,000. You go, but I want $1 million. Well, the appraisal doesn't come in at that. Now, if you got someone paying all cash, that's fine. Okay, fine and dandy. But 87% of people, they buy homes with mortgages. They buy homes with a debt instrument, right? Okay. So what we got is we got mortgage rates spiking up. Now the Americans in the U.S., our standard of living is kind of in free fall, right? Because, well, the inflation's really the worst thing that can happen to a country. And when inflation's going like this, the standard of living is going down. People can buy less, right? They can't go out to eat as often because they can't afford it. Their standard of living is going down. But when interest rates go up, their standards for buying houses go down. Their standard of living goes down. They can't afford as much home. They used to be able to afford $1 million home. Now they can only afford an $800,000 home. Their standards go down a little bit, right? Okay, so right now, in the U.S., our standard of living is in free fall. It's going down. But so you can have a crash with just a little bit of inventory. Right. Inventory is 1/3 of normal. I agree with that. But you can still have a crash when people have to sell if the buyers go away. Let's say we have, 500,000 homes for sale right now in the U.S. and normally it's like 1.5 million or something. Okay. Well, if we got 500,000 homes for sale, like probably 100,000 of those homes have to sell. They have to get out. They have to. Anyway, so when they have to get out, the prices come down. Even though inventory is low, if there's no buyers, they will drop the price to anything just to get out. If there's no buyers, they have to keep dropping the price, right? Now, other people, they tell me, well, Mike, we can't have a collapse in real estate right now. People have too much equity in their home. And that's true. Look, just in the last year, just in 2021, the average home price went up by $56,000. Do you know what the average income is in the United States? Well, it's less than $50,000. So most people made more on their home going up in value than they did on their job. Now, to me, that's pretty interesting. Okay, so you have this equity in the home. So can you have a crash when people have so much equity? Of course you can. That equity can disappear overnight, and when prices start to come down, people will start to sell, and they'll start to sell at lower and lower and lower figures. And people will see their equity get lower and lower, and they go, well, I don't want to lose all my equity. I want to get out also. So they'll be selling also, right? So on the way up, nobody's selling. They want to hold on because they know their home's worth, $50,000 more next year. Look, it went up $56,000 in 2021. Is it going to go up $56,000 more in 2022? Maybe. That's not my opinion. That might be your opinion. That's perfectly fine. Look, at my opinion is that equity is going to get wiped out. It's going to reverse, and we already see the shift. Look, the shift happened when the mortgages bumped up this last week. I mean, when they went, 5 months ago, we were down around 3%. We're approaching 5% right now. You get those 2 rate hikes of a half point each, you're going to be at 6% for mortgage rates. 6% is going to collapse this market. People say it can't happen. It can't happen. Well, it's already happening. Sales are coming to a standstill. Look, the prices may not be dropping that much yet, but pending home sales have dropped. They've dropped the last 4 months in a row, month after month after month. The comps are coming down on new home sales. They're coming down month after month. The comps are coming down. They can't move new homes. Why? Well, because they built a lot of them. There's a lot of new homes for sale, and they're expensive to build now because of the supply chain. Look, there's over 700,000 homes right now under construction. 700,000. Now, there's a company called Lennar. Lennar Homes has 27,000 homes that they cannot complete. Now, it's interesting. I've done dealings with Lennar. I'm a real estate broker, and I'm not a big fan of theirs. One of my clients, they messed him up. He had to put in his rental notification, and they told him his home wouldn't be ready for another 60 days. Now, what's interesting, that's a problem, right? It's a problem for my client. But now if my client told him he couldn't buy the home for another 60 days, well, there was a $50 per day penalty. Now they were going to charge him basically $1,500 a month for every month that he couldn't close it. Well, they didn't give him any compensation when they were 60 days late. Now, so there are 27,000 homes right now that they can't complete because of supply chain issues. But once the supply chain housing issues break, there's 700,000 homes that are going to hit the market. These are new homes. These are homes that they already having trouble getting sold. They can't sell them, so they're going to lower the rate, right? Okay, that's just what happens. Don't forget the foreclosures coming. There's going to be a slew of them. A lot of foreclosures are coming onto the market. That's just the way it is. Now, what I want to talk a little bit about, I know getting a little long here, but one last point here. Okay, let's talk about luxury homes. Luxury homes are going to get hit the most. They're going to get hit the most. Now, why is that? Why are luxury homes going to get hit the most? Because the trade-up buyer goes away. Look at, let's say you have $1 million home and your interest rate is at 3% on that $1 million home. You want to jump into the $1.5 million home, but not only is it $500,000 more, but your interest rate is now 5%. You're locked in at 3% on your trade-up home. But if you sell that trade-up home, you have to jump to a bigger interest rate, which is 5%, and plus you have to make the jump up of another $500,000. Look at the trade-up market goes away. The luxury homes, there's no buyers because nobody's trading up. So the luxury market gets hit really, really hard. Good time to trade up into the luxury market is after the crash. Wait for the crash and then trade up. Look at, these are just my opinions. You know, I am a real estate broker and I'm just a stock market gambler. They gave me a microphone and a computer so I can talk to you. You have your own opinions, but I hope you like this stuff. If you did, give me a thumbs up. It really helps me out. But get out there, everybody. Have a great Monday, and I hope to talk to you again later in the week. Bye-bye now.